Hi traders, this is Andrew again, and we're now going to look at an example of a bullish bat pattern. So first things first, we want to identify key levels of support and resistance on the higher time frame. We're currently looking at a 4-hour chart, and I just want to compress this quickly, show you the market environment in a nice uptrend at the moment. Prices retraced and then rallied, and if we just zoom this up, if we draw our Fibonacci from the lows up to the highs on this 4-hour, you can see price actually retraced, initially came down and found support at this level right here. You just take your horizontal tool and drop this down. You can see price came down to the 50. Look at this area right here, resistance, support, support, find support, and then it rallies up to new highs. We just adjust that fib now that we've made those new highs, and you can see that area right there, price has proved to us that the levels held and aggressively moved off this base around the 38.78 area. So if we move over to a smaller time frame, I'm going to go down to a 30-minute chart. What you want to look at, I'm just going to adjust this fib level here. This is that swing from the 4-hour. That's the key level right there, that 38.78 from the 4-hour chart. Look at the buying pressure in the market. Nice move off. Now, what we're going to do is we're going to draw fibs from the low up to the high. Okay, and that you can see is our aggressive move off our key level of support. Now, just follow along and see how price moves from here. Once we hit the 38 level, we can now start looking for a retracement and a possible pattern. So depending on the retracement of the XA swing, so here's your X at the bottom, there's your A at the top. Depending upon the actual retracement, if it's a 38 to 50, it's a possible bat setup, and if it's a 62%, then we're looking at the Gartner around the 79 level. So if we take our Fibonacci tool and we draw it from the high down to this low, just follow and see what happens. Remember, we need a minimum of 38% retracement, so here we didn't make the 38 level, so you just need to follow it along and see what happens. So you can see now we've come just through the 50 level, but we haven't quite hit the 62 or 618. Now have a look at the real tight confluence here, the 886 and the 1618 extension. That forms your bullish bat pattern. So if we now draw this in, so there's the drop, initial rally off our key level of support, X to A. We then retrace down to point B, and then we rally. You can see we're currently sitting around the 50 level, so we need a minimum of a 38%. We're currently at the 50, so that's fine. Now what we're looking for is a move to the downside. Okay, once price starts to retrace, we want to look for a possible buying opportunity down here towards the 886 level, and that's around 38.72 area. Okay, so we can highlight that like such, and what you can do is put a limit order into the market at this area. And what I like to do is then set my alert, so if I'm not at the computer or doing something else, I can come back and check up on this. So first things first, let's go into our orders, pending order. You want to place a buy limit, and the level we want is 38. For buy, you want to add spread, so I'm going around 75. Okay, we're dealing with anyway from a pip to 2 pip spread, so around 75, a few pips above our level, and a stop below, so around 38. Let's try 38.50. So try 20 pips and see what happens. Okay, so we'll do a 25 pip stop, so in at 75, stop at 50, and target I'm going to go towards the highs around the figure 140. And that should give us a decent risk reward on the trade. So we place that in. with the bat patterns, you want to place your orders and be aware of these patterns pretty quickly, because this leg down towards that D point can be very aggressive at times. Let's follow along and see what happens. Okay, so we've now been filled at this area right here. You can see our position. We're filled at 38.75, stop loss at 38.50, so 25 points of risk, or pip of risk, and the target we're looking up towards the highs here, about 125 pips. Okay, so really nice risk reward on these trades. Let's follow along and just watch price carefully. Remember, as with the other pairs, be careful about moving risk out of this too quickly. You can see we had a spike up on this, almost 90, just over 90 pips actually. So it's going to be your choice in terms of targets. As I said, we will go over the targets and take profits, etc. in the next section. For this example, we're just going to follow price along. And you can see price comes right back into this area, for some more orders. And we're still looking for price to pop higher. Alright, so now we're starting to release to the upside, and you can see we've just been taken out. So our trade, you can see 125 pips for 25 pip risk. And that's your bullish bat pattern. Remember, the key thing here, found at higher time frame support level.